The Dow swinging more than 1,300 points in today's session before finishing lower by nearly 800, 785 to be precise. For more on this volatile market, let's bring in two guests, Liz Young, Director of Market Strategy at BNY Mellon Investment Management, and Lindsey Bell, Chief Investment Strategist at Ally Invest. Welcome to both of you. Liz, let me start with you. Normally when the Fed cuts interest rates, stocks like it. Why not this time?
Well, they liked it for a little while.
Well, yeah, for a blink.
It was what I would call a Band-Aid. So
yeah.
It was effective as a Band-Aid in the very beginning. And then a few things happened. Number one, we almost immediately priced in the likelihood of another cut at the March meeting. So the market decided very quickly, we're not satisfied, we need more. We have this insatiable need for more cuts. Number two, we're questioning the efficacy of that cut. Can the Fed actually do anything to curb this virus? And the answer to that is, number one, Jerome Powell knows that he can't do anything to really fix the virus. But what he's trying to do is loosen financial conditions and keep money moving throughout the economy and give a little bit of a sentiment boost. And then the last thing is that there's this fear that they knew something that the rest of us don't know, and that things are actually worse than we
That's
realize.
what occurs to me, is that people are worried that by doing this intermeeting cut, Lindsey, that perhaps the Fed is signaling that they know something we don't know, and it's worse than you think. What do you think?
I think you're dead on, Tyler. I think that the market action really reflected that. You saw a major swing in the indexes today, 1,300 points. We've been seeing that for over a week now. We need to see that type of action really calm down before investors are going to feel comfortable with having their money in the markets. Also, we'd like to see a stabilization in the 10-year yield, too. What you're seeing today and over the last week and the action that you're seeing in the 10-year yield, I think tells you that there is panic in the market. There's a major sense of uncertainty about what the coronavirus's impact is going to be on economic data, not only abroad, but here in the U.S., as well as earnings numbers for U.S. companies.
What, Lindsey, does history tell us happens to stocks after a 50 half-point rate cut?
Well, there is some good news there, Tyler. There have been many 50 basis point cuts if you go back to 1970. And what we have seen really is that in the month following a 50 basis point price cut in the Fed funds rate is a 2.8% increase in the S&P 500. 12 months later, you usually see the stock market up 10.5%. And those 50 basis point cuts have come in both periods of recession and expansion. So that's just a combined data set there.
Liz, is the president using the virus to drive rates down, or is he using lower rates to fight the virus?
Maybe a little bit of both, but I don't know that we're fighting with the right tools here. And I want to go back to the point that was just made. With 50 basis point cuts, it does really depend on why we're doing it and when we're doing it. So if the market was already headed downward because there's a big fear of a recession, a cut is only going to make the recession a little less painful. It's not going to prevent
stop it.
The recession, right? And the market typically continues to go down after that type of scenario. If we get ahead of something, that's when we see things a little bit more effective in a cut and we have the market roar back. So we can do whatever we want with monetary policy here. It's probably not the full solution. We need other tools to use, and we need to help some of those companies that are really going to get hit by this supply side shock and by this demand side shock. And those are probably not the big, huge corporations that need all the help.
A lot of smaller businesses, isn't it?
It's the smaller ones.
Yeah,
so
I
I'd like to see a policy that helps the smaller companies in the US.
Liz, Lindsey, thank you very much. We appreciate it. I think we'll be seeing you again soon. Thanks a lot, guys.